Cook on cash. Apple's CEO discusses the company's $137 billion cash pile and the lawsuit from hedge fund manager David Einhorn. At a Goldman Sachs technology conference, Cook called the suit a sideshow, but said the board is in very active discussions on how to share more of its money with shareholders. Einhorn wants a company to issue preferred stock, which Cook labeled creative. However, Cook referred to Einhorn's media blitz as bizarre. Cook also addressed the company's products and talked about what he sees as the huge growth potential in the smartphone and tablet markets. In terms of smartphone growth, he cited data from Strategy Analytics, which shows sales climbing from 700 million units last year to 951 this year and to nearly 1.4 billion phones in 2016. He also referred to data showing a tripling of tablet sales over the next 4 years. Citigroup, in a note this week, taking issue with Apple's outlook in tablets. It sees trouble ahead for the iPad. It points out the loss of market share and the cannibalization from the iPad mini. But Cook said today, if we don't cannibalize, someone else will. He also said the iPad serves as a gateway product for the brand, citing half of buyers for the tablet in Brazil and China didn't already own an Apple product. Shares of Apple down more than 1%, near $470. After Wall Street talked up Facebook in the last few months, some analysts are taking a second look and issuing downgrades. BTIG's Rich Greenfield cut Facebook to a sell. He's lowering his estimates for cash flow because of increased spending. He also fears that users are spending less time on Facebook as they shift to mobile, and notes that mobile revenue growth is slowing. Bernstein downgraded Facebook to mark perform from outperform. Analyst Carlos Kirchner also concerned about mobile ad revenue growth. He said the growth in price per ad in North America could decline in the third quarter and steeply thereafter. He added that the revenue growth of Facebook Exchange, which allows advertisers to track and target users, was slower than he had expected. Kirchner also cut his price target to $27 after hiking it to $33 in November. Shares of Facebook down more than 2% today. Google is teaming up with an unlikely partner, General Electric. Its Maps data will become integrated into several GE applications to help utilities increase productivity. The Maps will assist the utilities in providing information such as outage restoration times for customers and in more efficiently managing their network assets. Terms of the deal were not disclosed. Shares of Google up fractionally today, near $7.85. In our best of the rest, Intel. The chip maker says it is developing a virtual TV service that will deliver live broadcasts and have programs available on demand. It plans to sell a device through retailers and directly to consumers. Intel has struggled as the PC market has stagnated as consumers move to tablets and other devices. Shares up about 1%. Soaring and sputtering time, our look at movers. First, soaring is NetSol Technologies, the worldwide provider of global IT and enterprise software, posting sharply higher results for the last quarter. The company's CEO saying favorable trends and brand recognition in Asia, especially China, helping spur growth. Shares up more than 5%. And sputtering is Level 3 Communications, the network provider and content delivery company, reporting a quarterly loss that was bigger than analysts had expected. That stock is down more than 10%. And that's Techquity this Tuesday. Remember, you can follow us on Twitter at RTRS Techquity. I'm Fred Kantayama, and this is Reuters.